Ah, Janos, I see that. Okay. Doc here from North America. Good morning, good afternoon, and good evening. It's another day of the week. What is it? Today is Happy to Hump Day, right? Wednesday. So it's sliding along. Hey, Robin. What do we got going on today compared to yesterday? Well, I did see that the Swiss. Let's find the Swiss here. The Swiss did slide into a sell. The stock market kind of, the stock markets all around the world are kind of quiet. Nothing major going on there. They've been kind of firm for the last couple of days. I guess you could say they're up for the week. What else can we say about that? I mean, we've seen oil up, then down, and last I looked, it was back up again. So oil is not exactly taking a rest. It's still finding ways to go higher. Let's find the Swiss there. There's a Swiss right there. And you see Swiss went into the sell there yesterday. A little pressure on it. Still in that long weekly buy. So I don't take any of these actions too much to heart. In other words, it has to show me more evidence. The Swiss, same situation. You can see it on J4X. A couple of red hinky ASCII bars and green line breaking down. The action pretty much. It's been one incredible long run. 20 some odd days. Over a month. It started in the daily buy back on April 12th. Here we are went into a sell on May 17th. So over a full month of one long run. Maybe that's a sign of inflation kind of chilling out. Maybe that's a sign of a little bit more peace breaking out in the European, the center of Europe, in Ukraine. I don't know. We'll see. Only time will show us the exact truths of it all. The other side of this is that the oil markets and the gold found a way to fall back into a sell. Yesterday we were like, whoa, that thing looked like, silver's in a buy for a couple days, and next thing you know is it slides in the other direction. We'll just give you a quick flavor of that right there. And there's your oil. You can see the oil's marching back up again. Never even went into the sell when it came to the front month, just the back month. Now it's trying to climb right back into it again anyway. And then gold, just as we thought, okay, good, it's taking off. It rolled over. And, it's in that weekly sell there. It doesn't really have a lot of heart in it at the moment to want to lift up. In many ways you could look at this and go, it's one thing to trade it on a day-to-day basis or a week-to-week basis, but overall it's such a broad product in the sense of time. Gold, when you look at, we've mentioned this a few times lately when trying to understand it better in this modern era of QE. And, when you see gold, sometimes it takes years for it to climb, not weeks or months, just literally years. And like 3 to 5 years. Right now it's already interpreted the inflation. It put a spike in there. You can see this. Let's see if we can show it to you. When it comes to the gold, you can see that put that nice big spike in there. It was a combination of the beginning of the war and in Europe, and at the same time, the inflation confirmation jumped out all at once. So when it comes to, compared to the currencies, when you trade the currency pairs, you find that the currency pairs are much more consistent. Hey, Miss Check, how you doing? Let's see. Hi, Doc. What's happening to the metals? Yeah, silver's strong, and right now, and that's an industrial metal / precious metal. And then at the same time, you're looking at gold that tried to get going yesterday and rolled right over. Hence we were talking about the idea of, with it in a weekly sell, you don't want to do anything but a binary or a bull spread in something like that, because you sure don't want to be trapped in the get nailed by the margin. Ahmad, how you doing this morning? So, and that's the reason why we always like to talk about just mention the option derivatives, because they can stop you from getting in trouble. And I can't tell you how many times throughout my whole life hearing people go, I was long that, and then I got stopped out. And would you believe it? 2 days later, I should have bought it again because it took off and went where I wanted it to go. I mean, I've heard that story so many times. So with option spreads, you can get into the spread, hold on to the spread, and the next thing you know, it goes against you, and you're sitting there, and you go, okay, but I know what my risk is, and I'm not going to get stopped out. And then a week later, you're making your money, and it gives you that just easier position to hold. You know, we used to refer to it on the trading floors as your level of comfort, or better yet, your threshold of pain, and that's really what it comes down to in the end. What your threshold of pain is. All right, let's see, where else are we at this before we start off taking a look at the charts? Oh my God! Just saw a really good one. I gotta copy that one and send that out. So yeah, that's where we are. So let's jump over to the Swiss again, and we'll go through the currency pairs. Unless anybody wants to see anything, and we'll jump over to that because we like to look at all the products. we're not afraid to, leave something and come back to it. So you can see there is the Swiss. It's obviously it's still in that weekly buy, looking very high up. It's just a daily showing some little weakness in here, and we'll just sit back and see how they trade it now over the next couple of days. But I'm not, I would not want to try to get short this thing. If you're long it, take a profit. That's about it. Let's put that line in there too. All right, imagine that. It was that whole run. Looks like, someone said, geez, Doc, you didn't add in. No, that was the whole run in the daily buy. It just refused to go into a sell. Joined in with the weekly, and the weekly joined in first, which was really amazing. What a screaming buy. All right, over there we go to the euro. And you can see the euro is trying to do the same thing. It's on a second day of the daily buy. Right there. The weekly is trying to turn up in here, but we've been in a weekly sell now since the first week of February. So it's been in a weekly sell for a while there. And it's just going to probably just chop around. Again, we'd like to see this weekly try to turn up in here. At least we got a daily buy going on. Let's look at it over on J4X. No, that's not it. There it is right there. And you can see the strength perking up on the daily, just like ours. Strength perking up. Now the euro, on the other hand, is here you're looking at the second largest economy in the world. So and it's not growing. That's the problem. It's not performing as well as it can. Some of the younger states like Poland and Slovakia and so forth and Hungary are doing really well, but the old European states are really tangled up in their I don't know what you call it, socialism, whatever it is, where they try not to grow. They want everybody to be equal. In other words, one size will fit all. I wonder how long it will take for them to learn that one size will not fit all. Now, from there we go over to the cable. I've been hearing about this monkeypox. I hope it starts to clean up in England. You see right there. You see that strength there going on a third day. Not really seeing the weekly also there try to clean up. It's not doing it. And there it is on J4X. The 3 days of the green hinky Ashkies. Green line above the dash line. So on the short term, day to day, we're seeing the buying going on there. We're seeing some strength. Ooh, what do we got here? Yana says, okay, well, what is up with the S&P 500? Oh, let's take a look at it. Yeah. What he said was he is going to keep on raising rates until he sees inflation start to calm down. I have to laugh at that. Just saying it, just repeating what he said makes me laugh. He's not going to do that. you know that he's going to, when in doubt, he will add money, and try to calm the pressures down. Uh, let's see, and it looks and look at the GBP cable. Yeah, it dropped due to the UK CPI this morning, despite inflation being lower than expected. Yeah, I think that monkeypox that they got going on too is giving it a little issue. But you know what? It went into the daily buy with more reporting of the monkeypox. So they've got some type of bacterial disease floating around. You see the pressure on it. But I would like just to see the weekly get up to the negative time manifold right there. Just that alone would give us some sight to believe that we're going to see some buying kick out. Yeah, the headlines. I'm always a little surprised how poorly England does. Solely because of they're connected to the Commonwealth, and everybody loves a billion people in a trading system, and that's China. So the Commonwealth has 2 billion people. The Chinese average income is supposedly around $12,000 a year. And the Commonwealth, with 2 billion people, has an average of about $14,000 a year. So I don't understand why they are not tripping and just shaking like leaves in a tree to be part of the Commonwealth. You would think that they would just rush towards it. You would think that money would be heading there in every which way, because the Commonwealth is twice as large as England. Twice as large as China, and being twice the size of China and having 2 billion people, you would think that the same investors that love China would love the Commonwealth. I guess the laws in the Commonwealth are too clean. And the laws in China, China passed a law that they could nationalize foreign companies. They just did that recently. So I don't know if there's a law in any of the Commonwealth states that says that they can nationalize foreign corporations. So you really got to wonder, what is this mindset with the China thing? It really does confuse me on the financial intellectual side. On the I am a pig and I want to make money and I'll do it any way I can with slave labor. That's why you love China. That's China, but it's not, the Commonwealth. The Commonwealth is a much more productive financial unit of 2 billion people. So, and then when we look at the euro, you go, okay, well, the euro is the second largest economy in the world. How come money doesn't want to rush to Europe? I mean, they're only socialist. The Chinese are communist. None of it makes any sense to me. But then we're in the quantitative easing era, and gold is 20% off all-time highs, and we are at 40-year highs of inflation. So why would I even doubt that something wouldn't make sense? No wonder Janos had to pull both his videos, which I wish he would leave up, that shows how to trade financial information, fundamentals, after they've been released. Because it's definitely an awakening for a lot of young investors, I think, to have someone like Janos who's been around for a while to make a video like that. I think it's a good thing, not a bad thing. But anyway, that's the headlines in my head. All right, from the cable, we jump over to... Did we do the Turkish Lira? Yeah, that's what we do, the Turkish Lira. Now, the Turkish Lira took off yesterday, and I haven't seen any headlines what's going on there. But they've been really pushing it. They're pushing it up the top end of the range here. And you can see that right there. And that's the Euro Turkish Lira. And I'm like, wow, what bug bit that, You can see the weekly is launching itself dramatically. There were politics there, war talk. I did not want a major talk in my comments on a private profile like that. The fundamentals though. The fundamental videos you made a couple years back, about 4 or 5 years ago, that would show how to trade the markets when fundamental information was released on a short-term basis. That's what I really want you to. I think it's important for people to realize that fundamentals are very dangerous to deal with in these times. And your videos were very enlightening as far as I was concerned. No, I wasn't, not pushing towards the war type stuff in it. I thought the fundamentals were very important, and you made it very clear how you showed good back history, how fundamentals don't follow through more than a few minutes at a time. Yeah, exactly. Right, exactly. I think it's important for young traders or new traders to the marketplace to know that fundamentals, you know how all these kiss and tell books are telling people how to trade and how they made all their money and all this stuff that doesn't fit anymore. And that to me was, I thought it was very enlightening. That's why I always mention it during the webinars. I always miss those because I'd play it once in a while just to remind myself how important it is. Because you made some good sense on the fundamental, how the fundamentals lasted no longer than a few minutes at best at times. Hence, I think you might have even been one of those that instigated the short-term binaries on Dukascopy because of that. Because you literally couldn't trade the fundamentals anymore unless you used a short-term binary. Because by the time you go to push the button to sell, it's already done what you wanted. And so the binary is the best way. Let it expire, 1 minute into the trade, that type of thing. A new trader sees a sudden 30 pip move and has his jaw drops. Right, exactly. Despite the stuff being on a calendar and previous moves are even compiled for Dukascopy traders in the article. Exactly. That's why I always thought it was important, and I still mention it years later. Because the worst what I really hate major major slippage on the orders due to the immediate tick adjustments. Exactly. One of the things I really dislike is when I see somebody advertising a book or a course, how to trade, like it's 1975. And it's like, hello, we're in the quantitative easing era, and there are options now after 76. So why are you trying to make people think that you can trade like it's 1975? Just because you made some do-re-mi in a certain circumstance. And that's what I'm usually pushing on. That is where my head's at. All right, let's get the Turkish Lira up on the J4X because they punched it in the face yesterday. I'm sure the news will come out soon. We haven't seen it so far, but you can see here. Let's widen it out on Chicago Quant. We jumped into the buy here, and we're in the buy here. And this thing has been trying to climb. That's 3 weeks back now. And you can see that the white histogram got back in between. Well, in this case here, the histogram really never broke through the time manifold itself. Remember, we because of the beta and that big high charge, we could probably shift back down into the 3.5. We'll have to start looking at that. Matter of fact, that's what we should do. Remember, that gas line 7 was for this incredible volatility where the product went from, look at the numbers, the way it shifts. I mean, we're looking at 7, and all of a sudden it's trading at 10. Then it's trading at 14 and 16, 18 and 21. This thing's been volatile. It's enormously volatile. Yeah, I hear you there. It's well worth doing the live stream because the head fakes that are going on with the data. And again, we talked about this yesterday. Funds and mutual funds and hedge funds and retirement funds all are incorporated. And when you're a business and you're incorporated, you have a business manifesto. And you write your manifesto explaining what your trading is going to be. There is some type of definitive form of trading that you're going to do. That's what allows investors to decide if they want to invest in your fund. And so, or put money into your hedge fund or put money into your mutual fund or whatever. And so, with that manifesto, they're forced to make moves. And so that's where that 1 minute, 2 minute, and 3 minute wild action comes from, is that the funds have to make a move because they've incorporated claiming they're going to make a move. And that's where a lot of that is coming. Now, in this era where no one has any real faith in quantitative easing, except for the idea that it's going to protect the longs in the end. That's the objective. Is what they have a magic word, like they have a magic word for everything. You know, like inflation. What do they refer to inflation for 9 months? Transitory. That's right, transitory. And so the magic word for that Fed plowing unlimited money into the marketplace to hold prices, they have a magical word for that. They call that stability. Yes, stability. And because they have that magic word for the stability, in other words, don't let your price, allow them to buy something and make sure they don't lose money. That's pretty much what stability all represents. Now, the time frame of it is a whole different story. It could be one day, it could be 1 month, depending on what the product is and what the importance is of it relative to the Federal Reserve. And as we know, the Federal Reserve is, or let's take it this way. We all know, we look at the metals complex, the gold and silver, which we know that the Federal Reserve is very unhappy with, likes to beat up on it. And here we are, as I said about 5 minutes ago in the webinar, here we are, inflation at a 40-year high, and we have gold trading at a 20% low of all-time high. We have silver trading 60-some-odd% away from all-time highs. So, where's the logic? Where's the fundamentals that have any value now to be paid attention to? All right. So you can see the Turkish Lira doing what they are. I'm going to take a look at. I want to look at the dollar Turkish Lira. See what they're doing with that thing. If it jumped through the top of that range thing we had there. Now it went up to the corner of it. There we are. So the dollar ran back up to the top end of that range there, or to that range we've established a new range there. Still a good 2+ points away from all-time highs. But we're a little surprised, and you can see the dollar has been in a weekly buy since back here, since the first week of February. So just like the euro, where the euro is in a weekly sell since the first week of February, I believe. Let's just take a look at that again. Yeah, same week, same spot. So it says a lot that what's going on there is that they're not letting go when it comes to the Turkish lira and the dollar. They keep on pushing on it. It's been in a daily buy since right there. This has been a winner chicken dinner for anybody that's been paying attention to that math. All right. From there, we go over to Canada. And that usually, obviously, takes us into that energy sector and metals sector and and so forth. So there is the CAD. And you can see there, I just want to take a quick look at dollar Turkish lira. We already have it burned into our minds. There it is, yeah. Moonshot. Moonshot, baby, to the moon. There we are. All right, here's the CAD. Right there, 4 days moving down. Obviously, we've seen oil going up, which is usually the recipe. This is going down against the dollar, which means obviously Canadian is gaining against the dollar. And that's a norm when oil is going up in value. That is usually like a 9 out of 10. It happens like that, 8.5. It's just like our math. And as we drift over to the oil sector, right there, you see it's perked up again. Last night's numbers came out, the oil thing, and showed some weakness, and they drove it down, and then they now they picked it back up. It actually fell down to about 108, almost 109, basically 108.96 in the after hours. Before close though, it was like in between the exchange official close and the electronic market close of 5 o'clock Eastern Standard Time, or is that 22 GMT or something like that? So. Oh, that's so nice. A message. Cool. All right. Now on, you see the oil lifting up, and then we saw the gold heading down. And so you saw that spike yesterday. We're assuming that we'll be seeing the South African rand going up again. Let's see what it looks like here. There it is right there. And it's kind of unchanged from yesterday. That was from the strength of gold yesterday, and now it's just sitting there doing nothing. They're probably saying to themselves, well, I think, as I start to talk to myself out loud, I really do think that the currency does reflect better than the metals complex. In other words, if you're going to trade gold, pay attention to the South African rand. That South African rand seems to recognize the issues. You can see here where it went into that buy back in early April, mid-April. And then you can see gold. Basically doing the same thing, I guess. That's the 14th. There's the 14th. There's the 15th. It topped out right there and went down. Just the same way the South African rand did the reverse. So I really do find that the currency is very enlightening to the actions of the metals complex. We've had some people like 54 on here that have their name on the website. They've mentioned that a few times, watching the South African rand and saying, "Wow, didn't realize how much influence it has," and it really does, as much as even more than the Canadian with the oil, because the Canadian is part of the process. Where I believe the South African country itself is still the number one metal, might be the number one gold producer in the world. Canada's like number 2. I think Russia's number 3, something like that. The United States can be number 2. They're all very close, production-wise. Alrighty, from there. And that kind of always shows the metals complex there. And we'll go back to the full metals complex after we're done the currencies. And then from the South African rand, we run over to the currency that will not be named. It's been in a buy for all a while. We're waiting for this thing to make some type of, move that would make sense that follows. At this point, it just seems to be dead. I mean, it's trading at 65. It's locked to the dollar to a great extent, so I guess it's going to be that type of currency now where it's not anywhere near as volatile. And we're just a little surprised to see the Turkish Lira become as volatile as it has, since it seemed to be on the right course as far as I'm concerned. All right, from there we shoot over to the yen. There it is right there. And the yen, it slipped in. It couldn't get into the buy yesterday. We thought it was getting in there, and then it gave us a red and green. So it's still in the sell from here. Let's go find a buy, and I can just move it. I don't feel like making one. So it's the yen. I don't know. We watched the yen lead this whole thing, and then the Swiss jumped in right behind it and supported it. And so I kind of have my eye locked on the yen. I kind of pay attention to the yen just for that reason alone, wondering, if it's going to plateau here and digest this and turn into a triangle or a plateau and a top, and then kind of go sideways for a month or two and then start to lift again. And we do believe that these markets could get really, really tired and sloppy for the next 3 months. And we have June, July, and August, and we're looking for the election. And we're seeing the elections play themselves out now. Mr. Trump is something like 75-1. He's able to pick the winners every time. Only one has lost, and there's a 76th one out there that's 3,000 votes ahead today, or 3,000 votes ahead from yesterday. So they'll have to do something to make it official sooner or later. So Trump is 76-1 on picking winners. So what's that say? It says a lot of positive things, I think. But end result is we're going to see how it all plays out in November. The first 3 days of November, I think the election is. So, good economic policies make government work better, and everybody gets a chance to make more money and live a freer life. Bad government policies is where the government tells you how to live your life, and they know better than you, which we know they don't. Because if they did, they would go into the private sector and make all that money for themselves instead of doing it for government. And government doesn't make money. All it does is take money away from people. So government doesn't even make money. Even as much as you think it's making money, it's not making money. It's just confiscating money. Stealing, basically. All right. From the yen, we go over to the Mexican peso. Right there. Getting closer and closer to the weekly trend. Or not the weekly trend, the trend. And the daily is inching its way down to that spot. You can see that the Swiss did go into a weekly sell last week, and we're in a daily sell now for the last 5 days. So, we're playing our way down to the weekly, the trend, the overall trend between those two black lines that we're looking at here. Those two right there. Oh, it says during the pre-market hours, the stock price of Target, they plummeted 25%. It's gotten ugly. The drop was caused by the company reporting that its quarterly profits had decreased by half compared to the previous quarter. Yeah, that's pretty. I watched that stock. I saw it when it was down 21% when the news came out. Ooh, hard smack, that's for sure. There we go. And there is the Mexican peso doing the same thing as we see right here with all the red. And there is a little turn up right there. You can see that. We'll see what that does. Just as J4X is way down at the lows. Alright, from there we drift over to the metals complex. And then we can, just explore the commodities at this point. Okay, and you can see right there that's the gold. And let's take a look at silver. There's silver, just kind of quiet, but in a daily buy for a few days. But the weekly's still minus. I'm not seeing anything, and I want to write an article for Dukascopy, but if I can't find something that's going to be a great trade, there's no reason to write it yet. Over on the, let's see, from there go over to the copper. Copper's like silver, even more. Showing firmness, coming off of that the 405 area. Still in the weekly sell also. So really having a hard time getting any of this stuff going. And then we go over to, see what the platinum's doing. See if it's holding up still. There it is right there. Platinum's trying to get into the buy today. That weekly has stalled. It was trying to get into the buy and did a great job leaping 100 and almost 100 and what is it, $150 over a 3-day period. It was really screaming and then just rolled right over. So the metals complex itself is not really showing any strength. Inflation or no inflation? Then from there we zip over to energies. There is crude oil spot. You see in the daily buy for a couple of days here. And let's put up Brent right there. Same thing, buying going on there. And the spot is about $2 now. What is that? Just literally $2 difference between the spot and Brent. Let's see. So let's see what the spot looks like on this. Okay, so they're still reflecting. This is going to expire today, I think. This goes out, so that's a real spot, 114.24. This is the front month though right now. This is the active, the most volume. Let me just see what the volume is. But last I looked, that is the most active contract now. Yeah. Volume in the June contract is 25,000, and activity in the July contract that we have up is 77,000. Open interest 61,000 over in June, 265,000 over in July, and 130,000 in August, and 26,000 in September, and October is 77,000. So they're all much more than the spot that's going to go out the door in the next hour. Or I guess it's going to go out at the end of today, maybe. Usually it's the Thursday, something like that. It's like the Thursday of the third week or something like that. It's odd, always odd. It's always in the high teens, like 17, 18, 19. Sometimes it's 20, the 20th of the month. I think it's got to do with the Friday and the third week or something like that. All right, from there, we drift over to natural gas. There is nat gas. Still playing with that 8.4 area. Let's see what it looks like over here. And let me just double check the nat gas also. It does the same thing as crude oil. They find a way to expire it. The front month is July. There's 200,000 open interest versus 53,000 in the June contract. And at the same time, let's see, what is it? Now, okay, so the volume is still, I didn't realize that. The volume is still high. It's 18,000 versus 6,000. So I switched months because the open interest is exploding on that side of it. So, and then we see it right here. See that strength there. So it keeps on trying to climb, just like it is right here. Now, European natural gas has been heading down slowly but softly, and staying in the 26 area. So let's see where it's at today. I lifted it up a little bit, 27. So it was like 26.6, 26.5, 26.7. Now it's trading at 27.17. So it's lifting up a little bit again. A lot of negotiations going on. A a lot of attempts to understand where Europeans are going to try to receive their energy sector, that type of thing. That is really the name of the game. All right. Let's do that. And from the energy sector, I guess that kind of completes it all. What we do is we run over to the stock indices and see what the stock indices are doing. And we'll look also at the same time the cryptos like Bitcoin and so forth. All right. So there is the S&P 500. You see it's been firm. And there it is right there. Now look at that. They're flirting with a sell today on ours still. Okay, that's right. I forgot all about that. They started pressing on it. And so we're underneath the zero line. We've been that way pretty much all morning long. And but the weekly itself still having its issues trying to get into the buy. This is the 5th week, and it doesn't really show any real hunger to get going. Let's see. They're showing some gas prices a year ago and then today. Wow. All right. So at this point in time, you can see the S&P holding fairly well on the downside more than the upside. But everybody's hoping for some type of bounce, some type of buying, whatever you want to call it. But in the end result, we're not really seeing it there. And you can see the S&P 500, which is the kind of like the #1 stock index in the world, because almost 50% of all the stocks in it are foreign corporations. So you're really looking at a global index, whereas the NASDAQ 100, or Tech 100 as they call it on J4X, and Europe, and that's the official name too, it's the old Tech 100. That has become an incredible mainstream product. Has all the go-go companies in it, from Microsoft to Apple to Amazon to Google to Tesla, and some of the biotechs like Amgen and so forth. So there's a lot of quality companies that are used every day. Now, you see that's kind of doing the same thing, trying to break into the sell after 3 days in the buy. But it's been in a weekly sell for 5 full weeks now. And they don't seem to want to do anything but kind of do little dead cat bounces. We'll keep an eye on that, see if they're going to slide back into the sell today, and then they pressure it the rest of the week. And then last but not least, we run over to the Dow Jones Industrial Average right there. Doing the same exact thing. And in a weekly sell the same exact way. No real life picking up on that. Then from there, let's go take a look at the short term. See how they're trading. All right there. There's the S&P 500. It's been nothing major. I guess you could say it's dropped 20 points since we started the webinar. That's what it is. So it is a pretty good one. It went into a sell right there and jumped into a buy for one whole tick and jumped right back into a sell again and made more money. It's in a sell all the way to right there. And we went up and it went into the sell again. I'm sorry, it went into the buy right there. and went up and then back into the sell again. Now it's jumped into the buy there, one whole tick, and failed. And looks like they're putting even more pressure on it. The Dow Jones Industrial Average is, last I saw, down about 250 points. So the enthusiasm because of some of these earnings coming out, and we've talked about that also here, and that is that earnings is the mother milk of companies and stocks. And if you are making money, no matter what, in the end, they're going to find a way to take your stock up. And if you're losing money, they're going to do anything they can to get rid of your stock. That's pretty, or go short it, or not buy it, or take your choice of how you want to describe it. But the end result is they are not going to be lifting that stock up whatsoever. All right, we're looking at the short term here. No questions today. Has been very quiet. And what else can we look at? We've looked at the indices. We've looked at the stocks. We've looked at the metals. We've looked at the energies. You know what I want to look at? The GBP JPY. That's always an efficient thing. So let's just jump over to that. GBP JPY. GBP JPY. Where are you? I know it jumps out at me, and I go, why didn't I see that before? It's around here somewhere. GBP JPY. There's the Swiss one. There it is. Now, that slid into the sell last week. It was in a daily sell 2 weeks back, and just in the yesterday went into the daily buy finally. So it's been an interestingly choppy adventure. Enormously interesting. Not a winner chicken dinner, that's for sure. And went into the sell. As a matter of fact, it's beating you up because, basically it's been in the sell for all this way, which was okay. But the weekly, we just missed it right there. Now, when you finally get the two that align together off of that close right there, I guess it's this close right there. Then the Monday is just a tad up. Tuesday becomes a buy, and now it's rolling back over again. So we'll see if this thing, more than likely, is probably going to find a way to get into a sell over the next 24 hours, and then it'll be the winner chicken dinner for the next sell. Indeed. Once in a while, we've got to be wrong. You can't be right all the time. And so we're never afraid to show you that wrong, since it's obviously such a very few times that it shows. When you're looking at 8, almost 9 out of 10 times, 8.6, 8.5, well, it's easy to point out your losses, since they're very few and far in between. We had the same thing happen in, rice. Rough rice out of nowhere fell apart a couple days. Yesterday it did it. We were in the buy. It, ran up big, and then they slammed it over a 3-day period. Let's see if we can show you that. Here it is right there. There we go. This will show us rough rice in a few seconds. Let's see, we're not getting any indications this morning, which is odd. There's rice yesterday. They're not showing us a quote, but last I saw it's unchanged. Um, went into the buy. I'm not sure why there's a red dot there now, but went into the buy there, ran up, and then rolled over. So if you do good money management, this is not a loser. Excuse me. But look at this. It's jumping into the sell. Went into the buy in the 16 area. The weekly buy went into the 16 area. Ran to 18 and change a couple days ago, 18.15. And now it is trading back at 16.90. So it happens. And usually if you follow the rules pretty safely and steadily, more than likely you're only going to have a loss once in a while, if not even that. Solely because, we'll have a loss. You have to have a loss. We can't be 100% perfect. We're already almost 90% perfect, and that's pretty hard in its own right. All right, what other things can we look at here? But I thought it was really important to take a look at that rough rice just to show you the wildness that it can be. You know what we didn't look at is the Bitcoin. Bitcoin's playing with a daily sell also. There it is right there. We've been in the weekly sell since the mid 40s, so low 40s, and so we went down to 25. So we lost 15,000 from the weekly sell to the low. You're looking at $15,000 off of a $42,000 product. So that's pretty tough. That's what's that? That's beyond 38%. I guess it's right around 38%. So the action that we're seeing, that's not 38, but it's close to it. It's definitely in the 34 to 32 area, depending on which number you look at there, if it's 40,000 versus 25. But in the end result is that's pretty much a punch in the face in the product. It's not really going anywhere price-wise, but the pressure is starting to be put on it again. And you can see there it's in the weekly sell now for the 6th week. So the pressure has not gone away. It just stays there constantly. And we see the same thing with, where is it at? Here, let's show you. Coinbase. There's a coin exchange. I'll show you a coin exchange. Looking the same exact way. There it comes. And there is Coinbase right there. See that pressure that's on it. Went into the sell yesterday. Trying to turn down a little bit more. And it's still in that sell now for 2, 4, 6, a 7th week compared to, what is it? Let's see who's doing this. Is it Apple News? There you are. Yeah, 3, 6. So it actually went into a weekly sell a week beforehand too. The coin exchange seems to lead, which is kind of interesting. So 1, 2, 3, 1, 2, 3. Yeah. So it's 6 weeks back on Bitcoin, 7 weeks back on coin exchange, which is interesting. The equity side seems to pick up on it more, which is well worth watching and paying attention to. I guess equities are trying to find a way to get into this game. It's all an enigma. The cryptos are confusing people to the point where they're not sure how to understand them. We here have held the same opinion all along. We like the cryptos in the sense that we think they're a new type of equity because they are a manifestation of quantitative easing, and that is that what it comes down to is the cryptos are the flip side of central banks. So people want to have a go-to away from the central banks, and that's what the cryptos are. But the central banks are not going away. That's where the fallacy comes in. See, so in other words, everybody's walking around trying to tell you, like the mayor, the mayor of Miami and the mayor of New York City started taking their pay in Bitcoin. And obviously they've gotten their heads handed to them from that. Both of them, it was in the $55,000 area. Now it's in the $25,000 area. So they've taken pay cuts basically by fooling around with something that shouldn't be fooled around with the way they're doing it. I think of it like I think of gold or silver or a good stock. I think that it's an okay thing to be invested in, but I wouldn't put my life investments into it. I would just put 1% or 2% of assets. Treat it like the most you would ever allow your portfolio to get is 5%. That's realistic. So, because central banks are not going to go away. I don't care what anybody says. They're not going to give up their sovereign power to create money. So there's no reason for anybody that tells you to buy crypto because the central banks are going away, have no idea of the financial system. All right, traders, it seems like we are down to the end. So I think what we're going to do is we're going to sing our way out of this. So everybody have a safe and smart day. Happy to hump day to all. And happy trails to you until we meet again. Happy trails to you. To all our trading friends. Later, Discopy traders. Later.